Today, will the Bitcoin bubble burst? Part 1. Hello again, it's Martin North from Digital Finance Analytics, welcome to latest post covering finance and property news with a distinctively Australian flavour. One of the big questions, of course, is Bitcoin. Is it going to go to 100,000 US, or is it going to crash and burn with dollars in crypto just disappearing? Now, Harry Dent, you're with us, and you've got some perspectives on this.
You know, I do. I'm not a Bitcoin expert, but I do study how new technologies emerge, and I'm seeing a very close analogy to the dot-com bubble back in the late 90s. We had a big tech bubble, just like we're having now, only this one's longer and bigger, but that was 95 to early 2000. People don't realize it was the last couple years that the dot-com swooped in. There was a correction, a crash in 98, a mini crash, and then a big run. And I'm telling you, the NASDAQ went up like 3 or 4 times in a year and a half. That was the dot-com stocks. That was everything from Amazon, you know, which had gone public at 6 and was running to 130 or something, and AOL at 400 times earnings, and there was maybe 100 plus of these dot-com companies, and they all bubbled up like this almost 20 years ago exact, and then crashed with the tech. The NASDAQ crashed, and it went down 78%. That the internet index from Bloomberg, whatever, the Dow Internet Index went down 95%. It was a wipeout. And 52% of those dot-com companies disappeared in the next 2 to 4 years. And that's what I expect. So when somebody says, is the Bitcoin bubble going to burst? My answer is, which Bitcoin bubble? This is the early stage bubble that happens. And one thing I do, what got me interested in Bitcoin, Martin, is that it did bubble so much, and crypto's around it, but Bitcoin's 70% of this bubble. You know, Ethereum and all these other coins, Ethereum, only 30%. It's mainly Bitcoin. Trying to grow big enough and acceptable enough and adopt enough to become the digital gold, which is a possibility, the rate it's going and stuff. What got me is that it did bubble up so much. I mean, there's always new technologies, and biotech's a big one now, and 3D, all these. Biotech has never bubbled like the internet did, or like cryptos are here. The internet particularly bubbled in that whole technology. It was the one sector that bubbled like crazy, and it became the next big thing. But where I'm having this debate with Michael Turpin, who is in Puerto Rico, an ultimate crypto insider. I mean, major investor, major speaker around the world. He has started tons of companies, consulted to tons of companies, done PR. He originally had a big PR firm. I mean, he just knows this in and out. But the people in the industry only see the growth, and they don't see the cycles. What happens, Martin, here is something very strange, but it's human nature. These new bubbles in the early stage. Now just for early stage, Amazon was nothing back then. I'd call it 1% on the S curve. And Bitcoin today is about 2% adoption in the US, rising, and 1% globally. So very early on. This is a baby, okay, like a 1-year-old, okay, just learning to crawl. These new technologies emerge while the last great technology, in this case, the internet and the stocks around that, are peaking and in a great bubble. See, there's another bubble. There's a bubble at the end and there's a bubble at the beginning. So when these older technologies are bubbling at the end and they have changed the world, and people see this new stuff and they go, oh my God, this is the next big thing. And they're right, but they don't realize that it took the internet 20 years to get to there. And it had a big early stage bubble that unbelievable. I mean, dot-coms were so overvalued, like I mentioned earlier. It was ridiculous. And in Bitcoin, you're paying $42,000 at the recent high for an invisible coin that can cost a good bit of money now to mine as they get more scarce. But still, you have nothing tangible like gold, okay? And say, oh, well, but on the jewelry market, it's worth this. No, that has nothing. It's just how many people will buy and adopt it. And that's actually the point. So That's what happened. They come in. So they get massively, people just put this, that's what the stock market does. They see a great new company that's growing at 100% a year, and they project it's going to do that for 20 years. Well, that doesn't happen. Nobody grows that fast. That's there. So the stock market overvalues it. Out of the hype of the present bubble, they put that right onto the new bubble and jump onto it like, and that's what, and it crashes. And again, internet stocks went down 95%. So here's my scenario, and I don't know, it may be about over, or it may go a good darn bit higher, but I say, and that's my prediction today, and I had this a year ago, by the end of 2022, when I see the greater NASDAQ and tech bubble, the greatest one ever, greater than the 95 to 2000, which is peaking now, damn it. I'm telling you this thing, the IPOs and Airbnb and the extreme, I just saw that euphoria, the sentiment on stocks is a whole leap above the 2000 top, which was a whole leap above every other top, including 1929. This is crazy, okay? We are near a top in the tech bubble. And it's going to crash more than people can imagine. 29 to 32 was an 89% crash back then. The FANGs, the leading edge, leading technology blue chip companies were General Motors, Ford, AT&T, RCA. RCA was the sexiest at that point, come in late stage, kind of like the crypto. And they crashed 89%. And these companies became the greatest companies in the world after the Great Depression and a shakeout. So shakeout, bubbles are natural early on. They're always going to be ridiculous. That is really kind of stupid, but they do allow a lot of innovation and a lot of companies to enter. How many crypto companies are there? There's got to be 100, 200, just like dotcoms. Half of those are going to disappear or more, okay? And the strong are going to get stronger. You let a lot come in, you make it easy money, and crypto was really smart. They don't do IPOs. That's expensive and regulatory. They do ICOs. Oh, coin. Oh, these aren't securities. They're coins to buy stuff with. Oh, yeah. Go try to buy a car with Bitcoin, unless you got a Bitcoin fan for a car dealer down there. I mean, they're not being used. They're being used to transfer money around the world. Ooh, yeah. And that's a huge thing, but they're not coins. They are securities. People are investing in these companies. And they're getting off easy, and there's a big shakeout. And then the surviving companies will grow for the next 15 or 20 years. So that's what happened. The internet started in 1991, bubbled up into early 2000, crashed into late 2002. Amazon went from to 140 initially to 6 or 7 at IPO, 130 something, back down to 6 in that crash, and then 3,600 or whatever it's been. Now people say, well, that's 18 years. Well, that's still a hell of a return. You try to get a better return than that in anything. So that's the way I see it. We're in that first bubble. It's about to crash. Let's say Bitcoin went to 100,000. What would 95% take it down? 5. The low just a year ago was 4. That 3 and 4, the last two lows, are actually my targets. Now, so that's the big picture, and this is very clear to me. It's not going to be I put this by crypto guys, and they always say, "Oh, come on, Harry, you don't understand crypto. This is exponential." Every technology guy tells me their thing is exponential. And George Gilder told me in a 2000 debate at the top of the NASDAQ, and I love George Gilder, by the way, that Harry, tech stocks. I was predicting a big crash. Tech stocks can't crash because they grow exponentially. Don't you understand technology, Harry? So yeah, they grow exponentially and they crash exponentially. That's what they do. So now last year, I was seeing this. I started tracking it. Had a first bubble, 2013, 1,200. From nothing to 1,200, crash 80-some%. Second bubble to almost 20,000, crash 84% again, almost exact duplicate. And I'm saying this is a fifth wave. I was projecting back then, looking at the trend lines through the tops, very steep, by the way. I was projecting in 2019 that by early 2020, that this thing would hit 32,000. And people go, Harry, that's well, it didn't take off as soon as I thought. In my December newsletter, I put it out again. I said, now it is taking off. Just starting then. It hadn't really taken off. I said, look, this line now says 34,500 is the target. And people were calling me saying, Harry, yeah, that might happen, but that's going to take a long time. Okay, no, it got there in a month. because that's how exponentially it hit 34,500 or stopped right at that target, backed off 15%, and then went through it. Now, to me, once it broke that, because my other scenario was on the 4-year cycle in Bitcoin, which Michael Turpin's also very familiar with, obviously, it could hit 40,000 by the year, but that trend line's been broken, so it can go much higher. If I use an exponential chart, which you have to do on things like this, the actual next target now is 160,000. And by the end of this year on the 4-year cycle, and it's never gone more than 4 years, and most of the gains are made in the last year and less, 300,000. So that's a possibility. It could just run up to 50 here or 100. I've been looking at Ethereum. Ethereum is the second biggest. I see Bitcoin as the standard, and that's a whole different thing. Ethereum is the epitome of actual companies that produce actual blockchain applications and become a real company, okay, and with real earnings and stuff. And Ethereum only today, on Tuesday, retested its high back in 2017 of 1433. That's a resistance point. Bitcoin has not made a new high as Ethereum did, although it's, so it could stop here. If Ethereum breaks up, Bitcoin would be at 50,000 in no time. It could go to, the top is kind of unlimited here. I can say two things with certainty high certainty from my point of view. Whatever this thing does, whatever this thing bubbles to, it will not last past December of the end of this year. This 4-year cycle, and Michael Turpin can tell you that it is built into the halving. He doesn't just call it 4 years; he calls it December every 4 years. And I agree with him that that's exactly what's happening. It won't last past there. It could bounce anytime, and there will be a big correction. 84%. I've always told people I will not buy Bitcoin until it's gone through that 90-some% correction. And I've always been expecting it when the tech stocks bottom, late 2022. By the way, and we've talked before, I have all my big stock cycles, 90-year super bubble, 40-year generational, 20-year, and even 10-year decennial, all hitting in late 2022. That didn't even happen in 1932 because that wasn't on the 20 and 40-year side. That was just the 90. This, I think, and I just listened to Robert Prechter today on an interview, and he's my favorite cycle guy long term, L8 wave and stuff. In addition, but he's also really heavy cycle guy, and he's been looking at late 2020. I've had that target, Martin, since 1988 when I put out my first book and had my demographic cycles. That will be, and I didn't even have the 90-year cycle then. Just on the 40 and 20 cycles that are so prevalent over the last century, we would see the lowest point in our stock market in our lifetimes at the end of 2022. So whatever happens, I would say take it and drop it by about 95%. So 300 becomes 15, 100 becomes 5, 50 becomes more like 2.5 or 3. So, and I would also tell people, look, if you got in an early find, but it's too late to jump. At this point, it could go way higher or it could just be peaking. It's too late to jump in unless you know what you're doing or you're willing to gamble and move very quickly. So that's my view on it. But Michael Turpin and I are going to agree on one thing. And again, he's a mile from me. I see his condo from my condo. We have dinner like when he's here once a week with he and his wife and stuff. This is a big thing. It is the digitization of all financial assets and money. So it's the financial internet. It's the internet of value. It's internet 2.0. There's all these names for it. I think the internet of value, it's how do you handle things on the internet where there's value and you need security of transactions and transparency, but privacy all at the same time. That's what blockchain does. And efficiency. How do you transfer $5 million to Venezuela and it costs 2 cents instead of 2%, which can be very high. So I do not know how it gets there. I do think that Bitcoin can grow to trillions and trillions of dollars in value, maybe 10 to 50% adoption, much widely traded and much more stable 10 years from now. Not going to happen in this downturn. It's not going to become the standard. A crypto guy thinks when they hear my forecast for a big crash, oh, that's just going to usher in crypto as a standard. it's going to get people to see that central banks don't know their ass from a hole in the wall, and they've been overstimulating the economy like a drug addict and a pusher, and they need to go. And I've got a 250-year revolution cycle, and it was the Catholic Church, then it was the monarchies. It's the central banks, from my view this time. They're going to go. And the last dictators holding on, from Putin to Xi Jinping to Kim Jong douchebag-un, okay? That's going to be the revolution this time. And Trump is somebody who came in, tried to be an autocrat, already losing favor fast. So all this plays in. So all I know, this is going to be an interesting time. And I do see Bitcoin and blockchain stocks and technologies as the leader technologically of the next wave. There's going to be, biotech, 3D printing. It's someday nanotech, making stuff out of nothing. I love that one. Is going to be something. But I think that's going to be the next big thing. And again, me as a longer term investor and not a trader, I'm looking to buy Bitcoin when it hits that 3 or 4 or 5,000, or when it goes down 95%. Bitcoin and what other else strong looks like it's surviving. I don't see why Ethereum wouldn't survive, and Bitcoin for sure. Everything else, Ripple's already fallen out of bed. That's the beginning of the shakeout to me. So I think everybody should get into this, not to speculate, but just it's an important part of this whole technology cycle and the whole economic cycles coming. We're going to see the biggest crash of our life. I'm still 100% on that until I'm wrong. and so is Prechter. And then there's going to be a global boom, 2023 to 36 or 7. There's going to be a longer one, but that's the first phase. And that's when you'll see Bitcoin move mainstream or blockchain. And just imagine if you could buy Bitcoin at 3, 5, or 10,000 and it goes to $1 million a coin. That is a real reality. And I wouldn't have said that even 2 years ago. But when I really look at this, that's a real reality. So I think it's cool. And this is going to be a good debate. The best thing about being in Puerto Rico ends up not the tax savings. I moved here without the tax savings and got them later. I moved here to finish my damn house on the island, which is almost impossible to build over there. It's like you meet interesting people. And Michael Turpin is super interesting. I just met Alex Lightman. This guy is brainiac. I mean, and I can just, and we just had a debate with Peter Schiff, a month or so ago. He's down here. And John Malden, another newsletter writer like me, and a couple other people. So I'm like in Puerto Rico, just meeting people, because gringos are coming down here for the tax advantages. And a lot of them, some of them are scoundrels, but a lot of very interesting people.
Very good. Well, Harry, I know you got to run in a second, but just to underscore, the debate is Thursday week, Australian time, right? And we'll put the links and things below.
Yeah. It's 11 a.m. on the 28th Sydney time, and it's 7 p.m. New York or Eastern time on the 27th for people in the U.S. And it's the greatbitcoindebate.com. That's how you register and find out, and it's free. Yeah. So I do highly recommend this. I just think this is more important to me than the shift debate, because I don't even see a possibility of an inflationary scenario. I don't even see a possibility of it. But what this thing going extremes and down and then extremes again, that looks very real to me, as unreal as it may look to other people.
And just one quick last question. With all of the money printing and with the really low interest rates, right, do you think that's also been one of the other reasons why Bitcoin has really shot up recently?
Yeah, again, that's a good point, Martin. People say, oh, is it in the Wall Street and Paul Tudor Jones, and they're buying it instead of gold as an inflation hedge? This is not an inflation hedge. It's not trading like gold, and it's not trading with inflation. If it had traded on inflation, it would have gone up earlier in this year when the Fed printed $3.4 trillion in a couple of months. That's when gold spurted up on a lag to that. It's not trading. It's not a safe haven. It's the biggest bubble. The only thing Bitcoin, I've got tons of charts, is correlating with is the stock bubble, which is the epitome of all the bubbles. Real estate's in a second bubble. Tech's in a second bubble. Stocks are in a fourth bubble. I mean, everything's bubbling almost. And it's just the most extreme bubble. And the dot-coms came late too and were the most extreme bubble. in the first tech bubble. That's why it's not a safe haven and it's not an inflation hedge. It's the greatest bubble, which is paradoxically, as I said at the beginning, a sign that it's the next big thing. Otherwise, it wouldn't have got this much attention. But secondly, that every bubble does the same thing. Bubbles don't crash 30, 40, 50, 60%. They crash 80, 90, 95%, end of story. Find me many exceptions to that. Even the first tech bubble in a great economy, great demographics, and everything going forward, and the smallest recession we've seen in my lifetime, almost not recession, it went down 78%, and the dot-com stocks went down 95%. So that's what bubbles do, and that's what Robert Prechter gets. That's what I get, because we study bubbles. People would say, and again, the crypto people tell me, this can't happen, Harry, because of the metrics of that. I'm sorry, you don't understand bubbles. This is a bubble, looks like a bubble, quacks like a bubble. Oh, and you know how I determine that, Mr. Martin? I take the Masters and Johnson male orgasm chart, put it on anything. Give me a blind chart of anything. Could be Russian births in 1907, okay? And I will tell you if it's a bubble or not by putting that pattern on it and see. Because most bull markets are not bubbles. They're strong and they go up and up, but they don't go up in this exponential thing. And what did Bitcoin just do?
Yep.
Just went from what, 4,000 to 42,000 in several months, and most of that was in 2 or 3 months. That's a bubble.
Yep.
That's a guaranteed bubble, and there's only one thing bubbles do is burst. So I'm not going to lose this debate, but I love Michael Turpin, and people should be listening to him, because he's the guy who can tell you what to buy a few years from now, or even now. I mean, he knows this industry. I don't know 5% of what he knows about this industry. So I mean, we're the perfect duo here. But I'm telling people, don't just listen to Michael now. You ought to be following this guy in the future.
Well, Harry, I appreciate your time today. I'm going to be chatting with Michael later on today as well, so we'll be able to put his side of the argument up too. And I'll also be listening into the debate Thursday week. It will be very interesting, and it's a very, very important debate.
It is. Okay, thanks, Martin.
Cheers. Take care. Bye-bye.